In capital budgeting, there may be certain considerations to keep in mind when it comes to tax law. And so in the US tax code, there are some special provisions that allow corporations to take losses from the current year to offset taxable gains in either prior years or future years. And so uh, one of these provisions is referred to as a tax loss carryback, which essentially means is if you have tax losses in the current year, you can take those and count them against gains from a previous year. And what that does is it shields your taxable income from previous years. So essentially, a previous year's income should not have been subject to any taxation based on the current year's losses. What the firm would have to do is file an amended return, and what they could do is use the current year's losses to receive a refund on taxes paid on up to 2 years, 2 previous years' tax obligations. In the other direction, there's what's called a tax loss carry forward. And so if you incur a loss in the current period, you are able to carry that loss forward for up to 20 years to offset future taxable income. So essentially, if you have a loss now, you won't get you don't get taxed at all. But eventually, when your business becomes profitable, you can use the current loss to offset future taxable income. And so that's why these tax loss carry forwards are considered valuable. They can help offset future tax obligations. And so this is this is of particular interest for firms that will foresee future profitable operations that may not be profitable right now.